Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 12th of September 2021. And last week we saw equity markets, cryptocurrency markets, and gold and silver markets all fall. Why? The fear of bond tapering potentially to be announced on the 22nd of September. Will this happen? And will these markets recover until then? We shall shortly take a look. But first, this video is broadly a repeat of our weekly update published yesterday. If you've listened to that one, you can safely ignore this one. If you haven't, then enjoy. Gold fell $40 last week, falling from $18.28 to $17.88, having hit a high of $18.30 and a low of $17.83. A fall of some 2.2%, falling below the crucial $1,800 level and putting in a lower high and a lower low than the previous week. In sterling terms, gold finished the week at £1,293. That's down £26. And in euros, it closed at €1,514. That's down €25. Silver fell 97 cents, falling from 24.74 to 23.77, having hit a high of 24.84 and a low of 23.74, a fall of 3.9%. Again, like gold, falling below a crucial level, which is $24, and putting in again a lower low and a lower high compared with the previous week. In sterling terms, silver closed at £17.19. That's down 66 pence. And in euros, it closed at 20.12 euros. That's down 0.70 euros. The gold to silver ratio rose from 73.9 to 1 to 75.2 to 1. Bitcoin is also down this past week, some $4,704, having had a rout a few days ago, and currently stands at $45,586. Looking at the equity markets, which also have not performed particularly well, we have the Dow Jones closing on Friday at 34,607. That's down 271 points on the day and down 762 on the week. The S&P 500 closed at 4,458, down 34 points on the day and down 77 points on the week. And the Nasdaq Composite closing at 15,115, down 132 points on the day and down 248 points on the week. Oil prices very marginally up. Brent crude up 31 cents at 72.92 and WTI crude up 43 cents at 69.72. The dollar index stands at 92.58. That's up 0.55 on the week and reversing recent falls. Those who can remember, just a couple of weeks ago it was over, albeit only slightly, 93. Now, we concluded last week's video with the following forecast. Quote, so next week we expect to see gold trading between 1775 and 1900, with 1750 and 1950 as outliers. And we can see silver trading between 2350 and 2550, with 23 to 2625 as outliers. We were very conscious there could be a fall back, though we were initially anticipating a rise, which we got very briefly, but not for long. Once again, gold and silver both traded well within our trading bands, but towards the lower end. Silver only managed to rise above the opening initially on Monday, and very briefly again on Tuesday. And gold, in fact, only managing to do so initially upon opening, and then being below the previous Friday's close or the Monday opening for the rest of the week. Now, last week we pointed out that gold traded within a relatively tight range of some $32, similar to the previous week's range of $33. This time, however, we've seen the range widen. So with its high at 1830 and low at 1783, that range has now increased to $47. Silver's trading range last week between high and low was in fact $1.12, most of it being the result of the disastrous non-farm payroll report. Now, when I say last week, I mean the previous week, and this past week now that's occurred, the spread's almost identical at $1.10. Now, as we've mentioned in many videos, if the economy is getting worse, silver will lag gold because of the industrial demand component dragging it down, which is why we've seen gold fall 2.2% and silver as much as 3.9%. Each morning we produce daily updates expressing the reasons for the various price movements, and since our update last week, we pointed out that although there was not much US reporting, this week that's just passed, we should note Thursday's jobless claims and Friday's producer price index, as well as the ECB announcement on Thursday. Well, the jobless claims came in at 310,000, better than the expected 335,000, so that was good. And the producer price index, though, for August came in at 0.7%, compared with expectations of 0.6%. Now, 1.1% may not seem a lot, but when you then average that out over the course of the year, then it does become more significant. This rise in prices is again fueling suspicion of higher inflation rates moving forward, and therefore the potential for the Fed to introduce tapering earlier than anticipated. Now, our view currently is that yesterday's figures were not strong enough to do that when compared with the non-farm payrolls the previous week. But nevertheless, the dollar value rose quite strongly yesterday, plus a rise in US Treasury yields was seen. Most eyes, however, will be placed on the FOMC meeting on the 21st and 22nd of September, which is still over a week away, where there is the fear of an announcement on tapering of bond buying coming sooner rather than later, and this has in fact captured traders' minds, and we're already seeing a fall in the equity markets and rise in the dollar, albeit relatively small so far. Now, from a technical point of view for gold, we have resistance at the 50-day moving average of 1797, whereas the previous week it was at July's highs of 1831, which still remains in place, but only after the 10-day moving average of 1810. So you've got 1797, 1810, and then 1831, all acting as resistance. And support is seen, of course, at 1775 and psychological support at 1750, with the ultimate target support at the August lows of 1672. We don't envisage it falling to that rate this week. Short-term and medium-term momentum have turned negative, and the MACD is suggesting a sell signal. Silver prices surpassed, then fell below, and then attempted to reach the 10-day moving average at 2417, but failed to hold it, and will again now find resistance there, that's at 2417, and at the 50-day moving average at 2473. Support is seen around 2390, and the fast stochastic suggests lower prices, while the MACD is suggesting higher prices, so a slight conflict there. Now, economic data last week, which we covered in the daily videos, included those already mentioned so far, which were the most relevant. But this coming week, we have much more substantive data. On Monday, we have the federal budget for August. Tuesday, the NFIB Small Business Index for August, Consumer Price Index, and Core CPI, all for August. On Wednesday, we have Import Price Index, Industrial Production, and Capacity Utilization, all for August, and the Empire State Index for September. Thursday, weekly jobless claims as always. Then retail sales for August and business inventories, also for August. And on Friday, the UMH Consumer Sentiment Index, albeit at the preliminary ones, for September. So with this in mind, CPI on Tuesday, import prices Wednesday, retail sales on Thursday are the key reports to watch out for. Now, on the political front, we still have Afghanistan and the spread of the COVID Delta variant prominent, and the fear factor of tapering is going to overhang the markets, especially bearing in mind the ECB announced last Thursday that they were going to start theirs soon because of the uptick in inflation, though they pretended to call it something else. So, with all this in mind, where do we see gold and silver prices next week? Well, again, we're caught between whether we're going to see more hospitalizations due to the Delta variant, and we suspect we will, and further restrictions in trade as a result. But perhaps more pertinent is the effect of whether the dollar will continue to rise, which again we suspect it might. So we're lowering our expectations for both gold and silver next week. So we expect to see gold trading between 1725 and 1850, though we suspect it'll really be between sort of 1750 and 1825, with 1700 and 1875 as outliers, just in case something very prominent were to happen. And we can see silver trading between $23 and $25, with $22.50 and $25.50 as outliers. What do you think? Do share your thoughts. Please, if you can, give us a thumbs up. If you're not already a subscriber, then press the subscribe button, plus the bell sign so you're notified of our videos. All that remains to say is that tomorrow we'll be producing a similar video to this one, plus one additional video, which we'll talk about tomorrow. Thank you for listening. Have a safe, enjoyable weekend, and a prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.